Now, for those of you who do not know me, my name is Paul Baker, as you should be aware, but I'm a certified financial planner professional. I've been in this industry since 2007 and I've been based in Dubai since 2016. I provide holistic financial planning to expats living around the world, but I do not want to spend too much time talking about what I offer, as many of you already are my clients or know me. So please do take a few minutes to go to my website, which is paulbaker.online, and you'll find a lot of the detail there. I do, however, want to give a bit of a backstory on my tax situation because I believe it is very relevant to this discussion. Before leaving South Africa, I was concerned about the potential of being taxed while working in the UAE. A lot of people said, you don't get taxed in the UAE, South Africa is going to tax you, you can't become a citizen there, etc., etc. So I'd done a lot of research and I believed we would be fine due to the circumstances, but there was always some uncertainty. As I left SA on the 8th of March, my first tax filing as a tax non-resident was only going to be in 2017. And as some of you might remember, the then Finance Minister, Pravin Gordhan, made the announcement in his February budget speech that SARS would be removing the foreign income allowance effective from the 1st of March 2019. And the interpretation or the discussion on the street was that SARS is coming for us expats and they want all of our money. That's so when my tax filing came around in that 2017 tax return, it seemed like the SARS stars were aligned, and SARS had actually added a wonderful little tick box on the ITR 12 form on your e-filing. And the question they asked was if I had ceased to be a resident of South Africa at any time during the year of assessment. I thought, could it really be that easy? Well, yes and no, and Hugo and I will get into that later. But in my situation, I believed and still do believe that my wife and I are no longer tax residents due to failing both the physical presence test and the ordinarily resident test. So our intention when we left South Africa was to use the UAE as a stepping stone into Europe, and we have no intention to return to SA permanently. I submitted my return, it was audited, I had to supply supporting evidence, and it was all accepted. So happy days, we were sorted from a tax perspective. Over the next year or so, the foreign income exemption became a huge talking point, and I regularly met with South Africans in the UAE who were concerned about the change in the tax law. Not understanding it was just the foreign income exemption that was changing at that point. So as I am not and have never been a registered tax practitioner, I decided that the best thing to do would be to find a tax practitioner that I could work with and refer my clients to. I spoke to several of them, and either they didn't properly understand the laws, or they were simply trying to sell the so-called silver bullet, which was financial immigration. I personally disagreed that FE was the be-all and end-all, and so continued my search. And I believe it was towards the end of 2018 that I started seeing Hugo's opinion online. And I think he did an Afrikaans radio interview back then with someone who it got shared with me. I had to use a little bit of Google Translate because my Afrikaans is nie so goed nie. But I then started engaging with Hugo and reached out with him. So Hugo is an experienced trainer, lecturer, and go-to industry expert. So much so that he was appointed by SARS to lecture and train their assessors on the capital gains tax and worldwide taxation based on residency. The Standing Committee on Finance and National Treasury know him by name because of his regular contributions made regarding the proposed tax law. Since 1993, Hugo has assisted several expats, sappers, and global citizens to enter and exit South Africa from a tax perspective, and is a cross-border exchange control and multi-jurisdictional trust estate specialist. Hugo is internationally known as Wegganer. Again, excuse my Afrikaansism. On Twitter, so if you want to follow him on Twitter, it's Wegganer. And taking special care of sappers residing outside of South Africa or planning to relocate out of South Africa. In the South African corporate and personal tax industry, his tax advisory company, Tax Forum, is equally well known. Hugo has lectured globally and across South Africa in his own name, representing SARS, representing the SA Institute of Tax Professionals, the SA Institute of Chartered Accountants, and STEP, the Society of Trust and Estate Practitioners. He currently serves on the working committees for both the SA Institute of Chartered Accountants and the SA Institute of Tax Professionals. Hugo is based in Cape Town and is proudly South African, yet also holds a UAE residency permit and spends 3 to 4 months per year in the UAE because of his UAE registered practice, which is aimed at assisting expats. Hugo, welcome to the webinar. Thank you for making time to be available for all of us.
Thank you so much, Paul. Appreciate it.
You're welcome. Now, just to give everyone a bit of a run through for today's and how it's going to go, we're going to touch on a number of points. You can see that there are slides up on the screen. I have given you access that you can scroll through those at your own pace just to see what's going to be discussed. We won't be going through the slides and discussing them point by point. This is not going to be a presentation. It is a discussion on various aspects of the South African tax law. So we're going to be going through, importantly, the phasing out of their financial immigration process, as well as implications that has on exchange control rules, the new 3 or more year rule around accessing retirement funds by tax non-residents, the new process to verify your tax status online and or via email to SARS, provisional tax, which is a bit of an eye-opener, crypto and international assets, inheritance rules, and then if there is time, we will have a Q&A session at the end. So please do submit your questions via the chat feature. If we do not have a chance to go through answer the questions, we will send out responses along with the recording and the slides that are on screen now within the next week or so, just depending if we have to give feedback on questions. As I said, our discussion is not going to follow the slides exactly, so feel free to flick through those while we have our discussion. Okay. So Hugo, before we get into the actual tax filing and the new tax year, let us just chat about the removal of the FE term and the Reserve Bank process. So why do you think this has been changed?
Thanks, Paul. Well, it's interesting. There's different opinions on the market, but I think the big reason for that was right back in 2008 when they signed the African agreement, that they agreed that exchange control will be taken away, not just by South Africa, by Nigeria, everybody. So we're actually the last of 53 nations to remove exchange control. But I think that the abuse thereof as a tax tool probably contributed to that. But I think the main reason, and you can find it backdated to the budget speech of 2008, was the first time that the African agreement, Free African Trade Agreement, was mentioned. And we saw that Mozambique and Nigeria removed their exchange control at the same time as us. Other countries did it between 2008 and 2018. So everybody had about 10 years to remove exchange control.
Okay. So does this make it easier for individuals to change their status and protect their income? Now talking about those who are based here. Or is this a negative for those who are wanting to immigrate, as they now need to leave their retirement funds in SA for 3 years?
Yeah. So it's a bit more complex in the sense that it takes a little bit longer. So in the past, new immigrants, people who just left South Africa, the minute you had your permanent residency permit in a third country or second country, you could cash out. Now we have to wait 3 years. So there's a bit of a delay. But the process, at the moment, it feels a little bit more complex than the financial immigration, but purely because we were so used to the financial immigration process, we did it blind eye. We knew what to do. Now it's a brand new process. And for example, I don't know, some of the people in the industry will know, I think you and I saw that recognition of transfer delays. So SARS is now sending emails to the clients. And I saw one of my clients where he had on the line now, he's had a payout and we've been disputing it with SARS for probably about 2 years. And suddenly SARS is now catching up that there's all these outstanding or pending payouts and so on. So the process, I think, is a little bit more complex right now, but it's smoothing and they are making it easier. But I think the post-immigration impact is much easier. So that old system where you had to block your account and you had to find someone to transfer money, that's all gone. So I think, yes, it feels at the moment that the process is a bit more complex, but I think it's just because it's new. And some of us who has been in the industry has seen this coming with all these funds. So suddenly SARS are now tying up all the loose ends with the different funds being paid out and the IRP5 not matching the directive. So just for those who don't really know what's happening, if you get this email from SARS about an ROT or a mismatch on your tax return, what some of the funds have done is that you may have had 2 RAs, they got 2 directives, but when they issued the IRP5, they combined it. That caused the mismatch. I had one client this morning where his lump sum is shown on his normal IRP5. So with his salary, his lump sum is shown on there as well because he resigned from the fund. He did not transfer it. Now SARS is saying there's an open directive because they're expecting 2 IRP5s, one from the employer and one from the fund. Meanwhile, everything is on one because that employer manages their own fund. They're not using an external fund manager. So it's all little variations, and I think it will all settle down. So yes, and one other one that is really happening that frustrates people, it happened last week, but I've been aware for some time about it. Some of you may know that if you got a tax clearance certificate, a TCS, and you had a PIN, if you wanted to refresh the PIN, you could just go back and they gave you a new PIN, which meant you can keep on refreshing and you didn't need to refile an application. And on the 9th of July, they've now stopped that. Every time you refresh your PIN, you get the same PIN as before, unless you launch a brand new application. So that is one of the first take homes today to understand that the TCS PIN good standing and the TCS PIN immigration is 2 different processes. So I get a lot of clients at the moment sending me the TCS good standing and saying, but the fund is not paying out. They're not paying out because that TCS good standing is just a good standing. So there's 3 different TCSs that expats must take into account. So we do the good standing one because that's my go-to. The first thing before I start taking a client on board, I do the TCS good standing. But then there is a TCS for foreign investment allowance to take money out of the country. And then there's a TCS PIN for immigration. So there's 3 different ones. There is a 4th one, but that's for tenders, people doing business in South Africa with government and large organizations. So if you're providing some service in South Africa, you might find a tender one as well. But for expats, TCS good standing, TCS foreign investment allowance, and TCS immigration. You only have to do the immigration one if you want to cash out retirement annuities. Okay, so it's not for everybody. It's an expensive process in fees, but it's only if you want to cash out retirement annuities. And then to come back to your 3-year rule that you refer to. If you have not been tax non-resident for 3 years, just not worth trying it. They are going to decline it. So for people who have been in the UAE for some years, excellent, do it, cash out your RA if that is the financial advice. So I'm not a financial planner, and that's why you and I work so well together, because I just give the tax advice and says that's the tax rules. But don't do it before you have replaced that investment with something else. So yeah, it's to answer you in short, a bit complex at the moment, but I think it's settling down and we're getting to understand the system much better. And compliments to SARS, they moved away from the Adobe Flash. Most of it is now HTML, and we're not having all the problems that we used to have in the beginning of January when we had that Adobe Flash shutdown.
Thank you, Hugo. Look, I mean, we can talk about my personal situation as well, because I'm very transparent. And I said to all my clients, I'm using myself as a guinea pig. But I'm busy working with Coronation and Allan Gray and Liberty to withdraw my personal retirement annuities now that we've been here for 5 years and the options available. And I had I got my immigration PIN, TCS PIN, no issues with that. I had to submit supporting documents. Even though I told them that I had the only asset I have is a property, they were very insistent on getting a statement of assets and liabilities for each of the 3 years. The previous 3 years, so I had to submit that as additional. But once I had the TCS PIN and submitted that to Coronation, they were saying, well, you need to have X, Y, or Z, being either a tax domicile certificate or a tax opinion from someone, either someone like yourself. And for what I've got in the various funds, it wasn't worth it. So I'm busy working with them. But Coronation, who've had it for the longest, now on day, I think it was day 21, had an auto fail or a rejection by SARS saying that the dates weren't aligned. And I shared that with you as well. in my filing that I did back in 2017, it was dated the 8th of March 2016 that we exited. On my 2021 return, which they've now updated the system, because previously it didn't show you the date that you became non-resident. If you'd done it in previous tax years, it still gave you that same tick box. And this is one of the other reasons why I liked your approach, was talking to other tax professionals who had claimed to be very knowledgeable on the subject. They said you needed to tick the box every year when you did your e-filing and say that you became non-resident then. But I think there are still going to be a few, shall we say, teething issues at SARS as they go through this process, because, as I say, mine was rejected. The dates all lined up. We had to look at that. On my 2021 return, the date is there. It matches. But interestingly enough, and maybe you can comment, and I haven't mentioned this to you, but I also, on my 2021 return, it says that they did receive an IRP5, but I don't have, it's completely blank. I don't have any South African employer, but for some reason they received an IRP5, and none of my funds have paid out during that tax year either. So,
yeah, that's an interesting one. You can override that. It's a seems to be a default position that it says you have an IRP5. So before you switch it off, before you say no, go back to the worksheet on page 1 and say refresh all data. So when you open the questionnaire, you tick the IRP5, yes, 1. If you had medical, you do medical. And if you're still contributing to your retirement annuity, and I'll get to why it's important that you keep on ticking that retirement annuity, even if you have no income. And then you say refresh data. And then if nothing pulls through, then you can go and switch it off, because then it's just a default setting and there is nothing on there. Okay. Just to come back to the retirement annuities, just remember, when you cash out this retirement annuity, your exemption is 25,000 Rand plus all the contributions that weren't previously deducted from tax. So if you were contributing in the last 4 years or 5 years and you had no income in South Africa, it is important to first update those tax returns, okay, so that you list all that contributions, and then your deduction or your exemption of 25,000 is increased by that deduction. To come back to the auto decline, SARS response last week to us is that the funds are not providing adequate information, because now in the past, just to compare the old process, we used to submit all the evidence to the Reserve Bank, and then we went back to a tax clearance, but the Reserve Bank never submitted anything to SARS. So SARS accepted what you told them on the TCS application. Now there is a communication between the fund and SARS. So we're not sure if the funds are not uploading, because in your case, you've provided everything to them. Is there a problem in the communication between the funds and SARS? I think that may be the case, because it's not just coronation. I'm having declines on day 21 from everybody. The other option, which someone suggested, it's maybe that the overload at SARS is of such a nature that they just have a auto decline when they didn't get to your application. Now, that would be rather unfair, because the law provides that they can send a notice to you to say that they ask, and where you and I have to ask permission for extension, SARS can just give you a notification of extension, or that they're deferring the deadline date. So it is actually quite an easy process. They shouldn't decline, because the decline now makes it you have to resubmit everything. And my problem with that is, remember, your proof of address needs to be less than 90 days old. So it could be that there's a expiry date on, or that you have to refresh that FICA information. And that's going to be a little bit more complicated. The one or two that I've seen where it was valid declines is that a lot of people did their TDCs, tax domicile for United Arab Emirates, or in the UK, it's called Certificate of Residence, or in America, TRC, Tax Residency Certificate. They've done that in the 2019 or 2020 tax year. Okay. Now, remember, 2020 is the last tax year for America. They are still in their 2021 tax year. Theirs did not end like ours. So I had to, and that's where you mentioned the tax opinion. Then I have to go and write an opinion and say to SARS, but that 2020 certificate is indeed the latest available for America. It's not outdated. They haven't got a 2021 one. They're not going to give us a TRC during the 21 tax year. You must be there at the end of December. They're only going to make that decision end of December. The UK now that the people have started filing their tax returns, we are seeing 2021 tax certificates. But the UK says, until you filed your 2021, I'm not going to give you a certificate of residence. So the one that they still issue is the 2021 one, so 2021. So I think there's also a little bit of a misunderstanding on SARS side. What is a valid current proof of tax residency and what is not? Just to explain for people living in countries that are not tax treaty countries. So you can either submit the proof of tax residency, being the TRC, TDC, CRO. They all mean the same thing. In short, it's a certificate of tax residency in a treaty country. If you're in a country like Bahrain, Panama, or the old Russian states, then you do not have a tax residency certificate option. Then you must have a tax opinion, unfortunately, and that costs a bit of money, because that's the most complex one, is when you then do a tax exit based on the ordinarily residence, and you live in a country where you can't get a second passport. Like Panama does not give you a passport. So you have to look at lifestyle, which church you belong to. And it's quite funny that we are a secular state, but SARS still looks at your religion. You look at golf course membership and things like that. So the tax opinion is a way out, but I think the strongest one is still if you're in a country like UAE, tax domicile, America, tax residency certificate, and UK certificate of residence.
Interesting on that. Liberty won't submit my return or submit it to SARS for the what is it called, the tax directive, without a tax domicile certificate.
Yeah. Liberty and Sun, the two I have at the moment is Liberty and Sanlam, and it's so I have tried to go through a CASA because I think it's totally wrong of them. The SARS guideline is very clear that it's either one of the two.
But also, I mean, I just think about my TCS process, my tax clearance status. SARS didn't ask me for a tax domicile certificate. All the other supporting information was sufficient. And they're happy to say that I'm not tax resident, but now through the life insurance providers like the Liberty, they won't accept it without that document.
And I want to repeat this, Paul, if you'll allow me to quickly interrupt you. Sorry about that. People that follow us on the South Africans in Dubai Facebook page will know that I'm very, very vocal about that. To get the tax immigration TCS, you do not need to incur the cost of a TDC. If you also go to SARS tax page, they call it your travel history. So for people in the UAE, for example, that entry-exit report is actually quite adequate together with your EID. So if you are not cashing out a retirement annuity, you don't necessarily need to go through the TDC cost unless there's a dispute with SARS. So 80% of my clients who are not cashing out, we have, like you, got the tax immigration clearance based on the proof that they were out of South Africa. And quite interesting, what the SARS puts more reliance on is a letter from your employer stating that you joined the company in 2016 and your employment is independent from South Africa and you're not on secondment, you are fully employed in that country. So that is far more stronger information than a tax residency certificate, because quite interesting is that not in the UAE, not in the USA, do they do the tiebreaker test. All that certificate says you qualify in terms of the treaty to be a resident. It has not done the tiebreaker test as yet, because there's no ways that electronic system can do a tiebreaker test.
True. It's very interesting. So look, with the new rules, and just touch on this, from an exchange control purposes, are non-residents still allowed to transfer the R1 million out of SA each year?
No.
Or can they? Okay, so no is a quick answer. So what has changed there? Because I know a lot of people would, even though they're based here, saying I don't have to pay tax, draw their South African estate down at R1 million a year, or 2 million for husband and wife.
Yeah, that was the surprise that came through on the 26th of February. Then there was, I was one who believed that the guide, the exchange control guide, was not very clear. Then they issued the new circular 8 in May, which made it very, very clear that you can only avail to the 1 million, okay, in the year that you tax immigrate as a traveling allowance. Okay, so if you listen to that clearly, the year that you leave, you can get it as a traveling allowance, which means you must be in South Africa. If we are doing a tax immigration for you in 2016, but you've actually left in 2014, then you can't use that 1 million as an investment allowance. You have to be physically in the country because a traveling allowance is cash you collect in South Africa. It is not a foreign investment allowance. So that is actually quite a setback for us. We didn't expect that. How they're going to monitor it, I still don't know, because interestingly, most banks still allow you to use your credit card. So if you go to a Forex dealer to transfer and they see the foreign address, they won't allow you to do it. But there seems to be no monitoring system to stop you using your credit card. Where if you go down the exchange control manual, you can only use your South African credit card to buy online 50,000 Rand per day, provided whatever you buy will be sent to South Africa or consumed in South Africa. Okay, so if it's, for example, a software license, it's consumed in South Africa. If you buy a gift for someone and it's sent to South Africa, that's okay. But you can't use it now to replace your tires on your car in UAE, or you can't use it as a hotel accommodation if you're quickly going to Turkey for a holiday because it's too hot in the UAE.
I think that's going to be, it could catch a lot of people, but it's also going to be very interesting to see how it's monitored, as you say. So now, look, thank you for that.
Can I just quickly go back on that, Paul? So a lot of people who have sent money to South Africa need not worry. What did stay in place is if you've sent your foreign earned income into South Africa, that money can still leave. We call it the in-out principle. Okay, so that has not been stopped. So if you sent in 50,000 Rand a month to pay your mortgage, keep your parents alive and so on, you can still take that money out, provided you have evidence. So it's not that difficult to get that evidence because you just go back to your foreign bank because they'll give you proof of the transfers. It may be that your South African bank did not correctly code it, and that we can quickly fix. It takes a bit of homework, but just for those on the seminar today or webinar today, when you send money to South Africa and you're working abroad, please don't use a code that starts with 3 or 4, the balance of payment code. 303 and 401 is all triggering tax in South Africa. If you have received the money into your bank account in England, America, UAE, doesn't matter where, and you send it into South Africa, the best is to use code 511 and then a subcode 123227. The easiest one is 511/7, which means disinvestment other. Disinvestment is that you are disinvesting from the country you're residing in and investing into South Africa. And then you can take the money back out, and there's no reporting to SARS that it's taxable income. If you are using code 303 or something like that, employer salary, they are thinking that you are being paid in South Africa for work you've done in South Africa. That code is for me working for a company in the UAE but sitting in Cape Town. I must pay tax on that because I can't claim the 183-day exemption.
It's the little things in the fine print, when you're doing a transfer and you don't think about that, and you get your email from Standard Bank or ABSA, whomever, and they say fill in the form and you have no idea. So it's important to remember that. So I think we'll just send that out with the minute or the notes that we send out as well, just to, if it's not in your slides already, just to make sure everyone's aware of that. So now coming on to tax season 2021, which has been open for 12 days or so. It's obviously the first tax filing season since the change of the foreign income exemption. And I think it's going to be an interesting one for a lot of people. So firstly, for those that ceased to be tax resident and informed SARS, how can they see it on the system? What can they do?
So I want to add someone there because I see Leanna is asking the question, if you've done financial immigration, do you still have to do tax returns? None of the tax immigration or financial immigration has switched off tax filing. Okay, so first of all, if SARS issued a tax return, you have to file. If you had any income in South Africa, you have to file. So a lot of people refer to the guideline that there's on provisional tax. If your rental income is below 60,000, they say you don't have to file. You just then don't have to file a provisional tax return. You still have to file the return for rental income. And it's well-known fact, if you go to the SARS webpage, that SARS has walked into the offices, or I assume it's people like Airbnb, and they got the list of all those online rentals. They know about that rental income, even if it was paid to your PayPal account in America. Okay, so they're fully aware of that. So there's now a new system where you can send a text, and it's in the slides if you go through it. The SMS code is 47277, but you unfortunately need to be in South Africa, and it needs to be a South African number. So you need to then ask a friend or a family member in South Africa to send that SMS to SARS, or you must call them to see if you must file a tax return, okay? And then if you want a booking, you want an appointment to ask why, then you use the word booking, your space, and an ID number, your ID number. If you want to see if you have to file a tax return, you use the word file, space, and then your ID number. But the best one, the one I love, is all these questions, do I have an active number or not? Is you can actually just use the words TRN, T, Tango, Romeo, Nelson. I don't know what N stands for. Anyway, and then your ID number. That will then give you a tax registration letter, okay? And then you know you have an active tax number. Then only go and ask if you need to file. If it comes back that they couldn't find you, then it's probably because your number is inactive, and then you probably don't need to. I would still, if I was you, just send an email to SARS and ask them. And best still is if you go to Google and you type at the top, SARS Cease to be tax resident. It then gives you a process which we call the declaration, okay? And that declaration that you are no longer tax resident is so important. That is the only process where we can get an external evidence that you have tax immigrated. Because remember, Paul, you said now if you log into your 2021 tax file, it actually gives the date that you tax immigrated. But I don't know if you guys have seen, when you print that tax return, that part does not print. So it is still a lacking part in the system that you have no printout afterwards, unless you do a screen print yourself to show that you have notified SARS. So the best is to file that declaration that you tax immigrated. And unfortunately, when you do that, they still want that entry-exit report if you're in the UAE, or copies of your passport if you're in other countries, and then unfortunately that painful 3-year balance sheet. Okay, that is their latest bugbear, and we are not going to get past that. I have clients shouting with me every day and said, you know, but when we started with the process, you didn't tell us. We didn't know. It is something that was brought in May, and SARS is not prepared to budge on that. You've probably also seen it until you've submitted that balance sheet, but it's only your South African balance sheet, okay? They won't issue the tax immigration clearance certificate, and they won't confirm that you have tax non-resident. And they're probably going to do that to check who owns property, so that when you sell your immovable property, your title deed property, that they know who to collect the capital gains tax withholding tax from. But so yes, unfortunately, tax immigration, financial immigration, it doesn't matter what type of financial immigration, tax filing is not linked to your tax status. A German who owns a property in South Africa still has to tax file, even if he's never been in South Africa. When should you not ask to have your tax number deregistered or struck off the register? If you have a retirement annuity or you own property, please don't do it. In the slides, you'll see the one nice thing we have now in the post-financial immigration era is that if you have no tax number, if you inherit up to 10 million rand, you can have that sent out without a tax clearance process. It's called a manual process. And the reason why we can do that is, remember, deceased estates, they pay the tax. So SARS is not too worried about the money leaving if the deceased estate already paid the tax. Okay.
Interestingly, just on that point, I had a client here who had, it was, I call it about R1 million that they'd received from their grandmother, but she had passed away a number of years previously, so 5 or 10 years previously. So I'm assuming, based on what you're saying there, it's in the year of the estate that the estate is wound up. So it can't be 5 years later when it's in their own names. It needs to when they're withdrawing that money, because he'd never registered for tax before in his situation.
Yeah, very clear. Touching on the topic, you'll see it's also a little bit in the slides. When you get money from a South African trust or from a deceased estate, that money must come from the bank account of the person sending you the money. The minute it gets paid into your bank account, your bank is going to ask you for a tax immigration clearance or a TCS financial, the FIA one for the 10 million. So please let the executor pay you directly from the executor's bank account. So even if parents or someone died 2 or 3 years back, if that money at the moment today is still in the bank account of the estate and you don't have a tax number, we can send it out.
Okay, that's important, isn't it?
Yeah, and if the executor is unclear, in the slides there's a email address, MCLA at SARS. It's the manual clearance letter application, and you can get that done.
Okay, I'm not going to go and find that because I know it's somewhere in the slides.
Yeah.
I have checked it, but there's 35 pages, and I'll leave that for everyone to look through afterwards if it does apply to them. So you also mentioned to me that the did you tax immigrate questions have changed on the new e-filing system.
Yes, yeah, quite complex. So the first question now is, are you a foreign national and non-resident? Okay. As a South African, you cannot. If you have a South African ID, even if you have a dual nationality, you cannot say you're a foreign national. A foreign national is any person without a South African ID. So SARS is causing a lot of confusion because that word is not defined in the Act. If you go to the SARS webpage and you type in at the top glossary, you'll find their definition. So it's anyone who does not have a South African ID. So if your wife is a South African permanent resident, okay, so she may have a Dutch passport, but she has a permanent resident certificate, so she has an ID book that reads non-citizen, but she has an ID number, she's not a foreign national. Okay.
Interesting.
That's quite interesting. Then the second question is, did you tax immigrate? In the past, it was in the current year, and now it says in a past year, and then you can type in the date if it's not carried forward. So that was where I had a lot of criticism in the past. And as you said, I was the one who kept on saying, only do it once. And that has, and 80% of my clients have pulled through correctly from the Adobe Flash system into the new HTML system. I have two groups of clients where it has not pulled through. The one is a client that tax immigrated before 1 March 2001. Okay. So that, because remember, we went on the worldwide basis on 1 March 2001. So there was no tax return where it changed. We did it on the RAV. So this year, that is the place where you can do it. The other one was someone who became a new taxpayer. So they didn't have a tax number. And we then had to put in on the RAV, that's your registration page, a previous date. So let's take a practical example. I know, Paul, you're too young for that. But say your child went with you, was 16, 17 years old. Now, at the age of 19, the child, or 20, got the first distribution from grandmother's trust. We now went to register that child. But on the registration date for 2020 tax year, that child was already tax non-resident. So when we registered the child, we said tax non-resident. So if you go to the RAV, it correctly states the person is non-resident. But nowhere on a tax return did we ever tick that box. So that's the two groups of people that have to now do an override. And I suggest you do the override in the 2021 tax return, plus you do this declaration being non-resident, because they say on that page, you must give a letter of motivation and background. And then you put the background saying, I left South Africa when I was 15 years old. I had no income. I became a taxpayer in 2020 because of grandfather's trust. And therefore, I consider myself tax non-resident. I've done 2 or 3 like that. We get replies within 7 days. The best we get is noted, we've put it on record. They don't really give you a certificate. There's still no certificate that says you are tax non-resident. Okay.
Yeah, you just get that acceptance. Your file has been accepted. Your return has been accepted. So I know we just, I don't want to run too far over time because we've got 15 minutes left. But just another question in terms of, and I think this is something I read, that SARS, even if people have financially immigrated or changed their tax status, they're now wanting everyone to go through the TCS process. Is that correct? Absolutely correct. So if you don't want to go through the TCS immediately, so you have no reason to transfer funds, then do the declaration. So that's the manual process. So they have softened a little bit. So eventually they want everybody to go through the TCS process, but they don't have the capacity.
So if you just want to make sure that SARS know that you've tax immigrated, do the declaration. If you want to do money transfers or retirement cash outs, do one of the TCS processes. My advice, if you have cash in South Africa and you want to do the RA, first do the TCS foreign investment, get the 10 million out. It's the easier application. The TCS immigration one is the more complex one. Okay, so just don't do the R1 million and don't tell the bank that you're living abroad, because strictly speaking, the bank is going to accept your FICA address, and lots of us still have a telephone number or a utility bill because my property is rented out, so I still have a municipal bill that can show a South African address. But that's dishonesty, and we must realize SARS are checking everything. The latest we've now seen is that SARS sending queries on people with expensive cars, asking for the finance agreement. Okay, so remember, I don't know if you guys have heard, we've had this delay about the penalty system. If you get too many fines and so on, they're going to ban your driver's license and so on, the ARTO system. SARS is now plugged into the ARTO system. We assume they plugged into Airbnb and all these online systems. The other interesting one that I haven't got clients like that because I don't do local tax returns is the drivers for Uber drivers and the Didi drivers and the Bolt drivers are getting tax queries from SARS saying, we know you registered as a driver. So SARS are really looking at all different sources of information. And Big Brother is watching us. There's so much information for them to look at.
And it's so easy to find it now. So I just see a question from Werner. I want to answer this because it relates to that, but he's just saying he's confused. He is not financially immigrated, but he always ticks the box to cease to be a tax resident. So I'm assuming he does that every year.
Yeah.
How does that affect him in terms of his filing?
So he must now, that person, someone like him, needs to open his 2021 and see what date is there. If the date is not far enough backwards, then do that declaration. And on the declaration form, you're going to give the actual date that you left. Okay. Yeah. And on the 2021 tax year, you override the one that they have there. But I'm told that if it is a recent year, so if it was a 2020 tax year, you can't fix it. Okay. So I've had one or two where it was like 2018 and I've changed it to 2016 because we have a TDC for the UAE of 2016. That allowed me to change, but I'm told I've not had the problem on the 2020. So someone who tax immigrated in March 2019, they apparently can't override on the 2021 tax return, but I'm not too sure. Also very important for those of you who needs to file 2021 and you face expat tax, so you're earning more than 1.25 million. Nothing stops you to tax immigrate on the 1st of March. Okay, so you on your return says, I tax immigrated on the 1st of March. Just remember that you then had to pay your exit tax before end of February. If you underpaid the exit tax, then obviously you must now do a little calculation about your interest and maybe a penalty for late payment versus the tax on expat tax. 100% of the clients I have dealt with, it was easier to backdate their tax immigration because the tax on the expat tax is substantial. And there is a 20% underpayment of provisional tax. So if you live in England or America where you've got tax credits, no problem, you're not going to pay in. But if you live in the UAE, you don't have a tax credit, okay? Or if you live in a country like Channel Islands, they have a flat 20% tax rate. We have 45, so there's a shortfall. So those people should rather do a voluntary disclosure. If you go back and you reopen your 2020 return, make your tax immigration 28th of February 2020, then you have no underpayment penalty. You only have the interest on the exit charge. And for most youngsters, the exit charge is so little that it's really far cheaper. The accountant's probably going to ask you another 4,000 or 5,000 Rand for that voluntary disclosure or VDP process, but absolutely worth it. Because if you have to pay in 20,000 Rand on expat tax, the penalty is 20% of 20,000 Rand. So it's really going to be 4,000 Rand. So that's just the ballpark figure. If you're looking at that figure, it's cheaper to pay your accountant to do the VDP.
Makes sense. I don't know if anyone else can pick this up. I'm just having an issue with the chat. So I see a number of people have sent messages, but Hugo, can you access the chat? Okay.
Yeah, so there's someone who asked about if you can't access your passport stamps. Quite interesting one that I just had last week. And I didn't do it, the client did it himself, but he submitted his frequent flyer printout and SARS accepted that, okay? Because at the end of the day, they're more worried about the days in South Africa than the days outside, okay? And what he did in the query he had from them that I helped him with, they asked him, why were you in South Africa last year, 2020 calendar year, 3 times? So we replied back, we're still waiting for the answer, but I'm not worried about that. One was Easter holiday, and then remember it was COVID, okay? So they were stuck in South Africa. And then the second one was a family member died, they came for a funeral. And then Christmas, he came for December. So it's pure holiday. That does not make him tax resident. So he was extremely worried because now in that lockdown period, he worked in South Africa. Remember, he couldn't travel from March, when it was Easter, in March to end of April. It was about 6-7 weeks he couldn't travel. If you have tax immigrated like he has done, and you're in a treaty country, you can come and work in South Africa for up to 183 days before South Africa can tax you. So as much as we have the 183 days out to get the exemption, they can't tax you before you've worked in South Africa 183 days. Okay, so people who are stuck here working remotely, don't worry, the treaty will protect you. It's the clients from Panama, Bahrain, Philippines. You have a problem and we'll need to address that. And that's where we must look at physical presence, you know, not being in South Africa for 900 days in 5 years. So if you start looking at that, remember 5 years is a very long period, and 915 days over 5 years means every year you had to be 183 or average of 183 days. Very few South Africans did that. So even on the physical presence test, you never made it, and I can still keep you outside.
Well, just that physical presence, my understanding, as long as you've been out the country for about, 365 minus the 91 days, then you're fine.
Yeah,
because you have to be at least 91
and you have
days
5 years of playing around with it. So it's not, you know, most countries like UK, if you've been in the UK one tax year, 183 days, it's automatic back. In South Africa, it's a 5-year test, and it's 91 minimum per year. So if you've been here for 4 years, and there's in the middle year, you weren't here for 91 days, your 4th year is year 0 again. Okay, so you jump back. So it resets the clock. So South Africa is very, very lenient on that.
Okay, well, that's awesome if someone doesn't want to become tax resident again, but obviously we've got a lot of people who are based here who just want to make sure they are not tax resident. So I think there's a couple of other questions that I've got here that I want to touch on, because I do think it's important, and if we haven't answered the other stuff, we can get there. And I know we were speaking about the new SMS system, which we've covered, but there's a very contentious issue that I've heard of individuals using, which is crypto. And I'm sure there's at least a couple people on this. I don't know for definite, so I'm saying I'm assuming that transfer money into and out of South Africa using crypto. I met someone the other day to certify documents, and he was busy using he was sitting here in Dubai using his South African credit card. He was actually using his Woolworths credit card to then buy crypto on an exchange. He was using a South African as Woolies credit card. He was then immediately paying off his Woolies credit card with his from his Investec account and earning firstly the arbitrage, but also earning points back on his credit cards. So what are the implications of, transferring money using crypto both to South Africa and out of South Africa?
Okay. So first of all, just remember, when you're non-resident, South Africa can still tax you on sourced income. Okay, sourced means your rental income is in South Africa. SARS has issued a document, and it's on towards the end of the slides. I've given you the link to that. SARS feels, and I don't agree with them, that the minute you buy and sell crypto, the arbitrage, you are trading. And the minute you are trading, they feel they can tax you, even if you're non-resident. So be aware of the fact that we're going to see a lot of debate, and SARS are going to make an example of 1 or 2 people, okay, saying that because you did this arbitrage between the foreign crypto and the local crypto, and you made that arbitrage profit, they want to tax you on that. For someone who's not tax immigrated, so you're claiming the expat tax, you're below 1.25, but you've done this crypto transfers. SARS in their document says everything is income. They do not acknowledge that it's capital. Because remember, we have a safe harbor. If you have traded in shares and you had a share and that you initially bought it as speculative, but you've had it 3 years, then it automatically jumps to capital gains. Okay. They say, and that's true, crypto is not a share as defined. It's not an equity. Therefore, we're going to tax you. They want to tax you like it's a gold Kruger Rand. But we know on Kruger Rands, if you kept it for many years, they are not taxing us on it as income. They do accept it to be capital gains tax. But in the crypto document, they say they're not going to do that. So this is the first year of assessment post that document. So it would be interesting. So I'm just saying to people who've been doing crypto, be mindful of that. The Reserve Bank has also started, and I gave the link to that, and they make quite a point that they do not acknowledge crypto, any cryptocurrency as currency. Although we call it currency, in their books, it's not currency. So technically speaking, moving money in and out of South Africa using crypto contravenes exchange control. So let me quickly try and explain to you why the Reserve Bank is so sensitive about it. When you send the money out to buy the crypto in America, that money flows out. On the M3 money, on the big reporting to the world, there's money flowing out of South Africa. When you then bring it in and you put it on, say, a Luno platform, and now it comes back into South Africa, it has not gone through a currency that they report on. So they can't tell the world that money has come back to South Africa. So we have this on paper, huge outflow of money and no inflow of money. And that upsets the Reserve Banks. My personal opinion is just make it a currency, then we have the flow back. But at this stage, they won't make it. So technically speaking, Reserve Bank says it's a contravention to use crypto to get money in and out of South Africa. And the tax band says it's a taxable event, it's trade. And because you're trading in South Africa, they have the right to tax you because your source is in South Africa. It's going to be very interesting because none of the court cases dealing with source clearly says that trading is in South Africa. But, you know, is a bank account in South Africa adequate evidence of what we call a permanent establishment? I personally don't think so. But then again, I'm not the tax advocate. I'm not going to defend you in court. So it's going to be the tax advocates who's going to win this one. And they're going to make huge fees out of our crypto bunnies, you know, playing around with all this.
Oh, it's going to be interesting. Well, I mean, the guy that I was talking to, he said basically he buys 100,000 Rand in crypto. He then transfers it into Bitcoin. He takes any profit he makes in the arbitrage, puts that into his cold wallet, and so he only ever has the 100,000 Rand. So he's saying, well, I haven't had a gain, and the rest is kind of going off into his cold storage. So anyway,
yeah. Paul, can I just quickly, I see there's a lot of questions about people about this having financially immigrated. What must they do? If I can make it very practical, try and get someone to do that SMS for you from South Africa to see if you have to do a tax return and if you have an active tax number. But at the end of the day, the safest journey is go to that Cease to be South African tax resident page of SARS. Fill in that declaration. Submit the 3 years of balance sheet, even if it's a null balance sheet, and get that email back from SARS. I think until you have that email in writing, because that SMS may come back and say you don't have a tax number, but how do you keep it as evidence? You know, I'm still very old-fashioned. I want that letter from SARS to say we've taken note that you're a tax non-resident. So even if you're financially immigrated, because remember, SARS has publicly stated that was not adequate. Because remember, many people did not submit a tax domicile certificate to SARS. You did submit your tax domicile to the currency trader to get your money out of the country, but it never went to SARS because you first financially immigrated, then cashed out your RA. So it was a subsequent process. So if you're uncertain, do that process, do it. It's a manual process. We fought for months to get SARS to admit they have to give us confirmation of status. And if you do not have a 2021 tax return that says you tax immigrated in 2016 or 2015 or whatever, do the manual process. It's painful, but it's your best insurance policy.
And just on that, because I know people are quite conscious about fees and things like that, there's no cost because they're doing that directly on the SARS website. So they can all just do that
email.
themselves.
You don't even need to have e-file. It's an email. You send it to contact us at sars.gov.za. That page tells you what you want. They want a motivation letter, 3 years balance sheet, and your travel history. So if you live in the UAE, entry exit report, motivation letter, I put the EID there and a letter. They don't ask for it, but I've seen that the minute I put a letter from the employer there, then there's no queries.
Okay, awesome. That's good to know, and I think it's helpful for those who are concerned, as you said in the chat here. Look, I did have another question which kind of tied in with the Bitcoin thing. Is what do you think? What would you be doing? What should people be doing to transfer funds out of SA as quickly as possible? And if we look at the people wanting to get their RA money out and stuff like that, I know I've got my personal process, but what would you say is the most cost-effective and efficient way to get your money out of South Africa?
It's to go the old-fashioned way of the FIA TCS and do it as quickly, because I don't know if you guys have seen, the rand has fallen quite a bit today because of the unrest in the country. So it is back to I think the last I saw was 24 April's rates. So it's really not good for us. So it hurts. And please, if you want to do the Luno thing, do it, but just be very, very mindful that you're opening yourself to a criminal investigation, because the Reserve Bank has deep pockets and they're going to look for one or two examples. And the problem is, if they go for you as a small person, you do not have that deep pocket to defend yourself. So please, please be very mindful. If you can, rather get yourself a Forex broker. Paul has links to some, I have links to some. There are plenty on the Facebook pages. Let them help you with the tax immigration, TCS, foreign investment clearance. Those are really, I think, like less than 2,000 Rand lately for an application like that. If you can provide a bank statement showing that money there for more than 90 days, it's a very simple process and the money goes out. That process, do as max as you can. It's valid for 12 months. You don't have to transfer everything immediately, and you can transfer in tranches that you like, but do a maximum application. If you have 10 million in your bank account, do 10 million. You don't have to transfer it. You can transfer as you like. But while you do it, get it. While it's in your back pocket, then anytime the rand starts sliding, you can immediately phone your Forex broker and say transfer.
Good insight as well. So I think that covers everything that I wanted to chat about. I think let's just see if there's any unanswered questions here. Just spent 5 minutes on this. Thank you to someone who said that N is for November. Clearly, I didn't go to the army. I was post-conscription age, fortunately.
And I did do conscription, but I did the receiver, so I didn't do Morse code.
I think the only I know is Whiskey Tango Foxtrot, but anyway. So someone is financially immigrated. Always took the we answered that. So what is the risk if SARS exempt tax non-residency, and for some reason, like losing job in the UAE, you return to RSA in, say, 2023, is there a risk of getting taxed on foreign income earned in 2021 and 2022?
No. You become tax resident when you come back. So, for example, when you lose your tax treaty position. So in practical terms, most tax treaties, if you lose your habitual home, so you cancel your rental contracts and you come back to South Africa, the tiebreaker was linked to your home. Then you become tax resident in South Africa on that day. And we, unlike the UK and USA, we don't take you to the first day of the tax year. We actually bring you back on that physical date. Okay, that is your new tax immigration with an I date. You have the right to revalue all your assets. So you have a base cost step up to the then market value in the foreign currency. So absolutely no risk. I have not had any case, and I've had many people coming back because of losing jobs or purely retiring. And I've never had any aggression from SARS trying to backdate taxes. We've had one or two where they then say to us, but file the tax returns for the past 2-3 years. So SARS did not issue tax returns. When we reactivated the number, then they asked us for those tax returns. But don't fear, you still fill it in as if you were taxed, not as if you were taxed non-resident. So you only fill it in with your South African sourced income. If you had nothing, you had nothing. And the only one where I see problems is people just click on the auto assessment, and the auto assessment will tax you on the South African interest. If you have an auto assessment, go to the interest income. On the left-hand side of the screen, there's a little white arrow, a white cross. Click the cross, remove it from taxable income, and move it to the tax-free income. That's the only thing you have to do, and that is in your control. The system will unfortunately treat it as always taxable because the system got it from the bank and they're going to tax you on it.
Good. Okay, so someone's asked the SDA applies from 1 Jan to 31 December, right? That is correct. The single discretionary allowance. Is it then possible allowed to move 1 million out in SA in December 21 and then another 1 million in January 2022? This would effectively mean 2 million can be externalized in tax year 2022.
Correct. Yeah. So I have clients that in end of December, and I think 2nd or 3rd of January when the banks opened, they did the second one. Totally legal.
And look, I had the client do this year as well, but also just keep in mind, I think that's Maya who asked that question, is that's per person. So you could do 1 million for husband, 1 million for wife, and then 1st of January, 1 million for husband, 1 million for wife. So essentially 4 million in total. Okay. We answered the Taiwan question.
Can I also just add to that? If you have family members that you trust, they can still send you. Remember, me living in South Africa can send R1 million to someone living abroad. Just be mindful that there could be donations tax on me because I'm a resident in South Africa. But a family member can also send you money out, but make sure it's a loan and not a donation because the sending person may face donations tax.
And that's 20% at the moment.
20% on the first 30 million, yeah.
Yeah. Okay, so someone completed FE in 2019 and have done e-filing tax returns since then, 0 rated due to no income in SA as non-residents. Do we still have to do the declaration to SARS that is mentioned in the discussion and slides, or are they all good?
No, that's the one where I said I would still do it.
Okay.
And that's the specific one I looked at. It's maybe belts and braces, but you know what? That is my confirmation that I have it. Because remember, the tax return is not final until 3 years has passed. And then if SARS argues that you were not fully disclosing everything to them, then the prescription fails. So declaration, declaration, declaration. And it's something you can do yourself. You'll see on the webpage, it's a document you fill in yourself, you sign it, you send it to contact@us, and you don't even need to reactivate your e-file.
Cool. If I've only earned monies in the UAE and no assets, will I be affected by any tax? I mean, I'm assuming no assets in SA.
Yeah, but provided you've tax immigrated. If you have not tax immigrated, you're on a worldwide basis. So the caveat is provided you have correctly tax immigrated.
Okay, so this is Vernon who said he's not tax immigrated, but he's always ticked the box for cease to be tax resident. So
yeah, that's the one where I said go back and try and override the question, move it back to 2016 or 2017, because the system may remember the last one that you ticked.
Perfect. And then he also asked the question, which I think is pretty standard, who gets affected by the 1.25 million rand annual cap? So that's on your foreign income allowance. So that would only be if you're a South African tax resident.
Correct. Okay. And so very, very important. If you have family members living in any other country than yourself, as long as it's a tax treaty country, we can tax immigrate that person based on the treaty, provided they have what we call an habitual home. It need not be their own home. It can be a rented. An habitual home is a gewoontehuis in Afrikaans. It's where you habitually return to rest and recuperate. It's good enough. It need not be your own property.
Okay, awesome. I think let's just take 5 more or 6 more minutes, or 5 more now, 1:15. If you have no pension or RAs, etc. in South Africa, but you own property and shares, should I tax immigrate or financially immigrate? Is the question.
Okay, you can no longer financially immigrate. The question to tax immigrate, probably yes. If you're earning a salary or remuneration above 1.25 million, you're going to pay an exit tax on the shares, but not on the immovable property. The immovable property will only be when you sell it.
But you also, then they just need to look at the date that they actually left South Africa and potentially backdate that if they haven't done it either.
That's the typical voluntary disclosure question, you know. So have that discussion with your accountant and see if it's not worth backdating it to a voluntary disclosure.
But again, there you're going to pay your capital gains tax based on the returns up to at the point that you financially immigrate or tax immigrate.
Tax immigrated. But if you, for example, look at the South African Stock Exchange in February last year was very bad because of COVID and all the worldwide rumors about COVID. So most of my clients, when we look at the VDP for 28 February 2020, the value of their assets, the stock, was so low. You know, just look at the NASPAR shares. There's a 27% gap just in February last year and February 2021. Okay, so if you take 18% on that, it's a big enough saving to rather pay your accountant that 4,000 Rand to VDP.
Makes sense. But again, at the end of the day, when you eventually sell those, you're going to pay because you're just rebasing it at that time. So if you now sell it at this point.
No, but if you're tax immigrated, you're not going to pay tax on it. If you're living in a country that doesn't have capital gains tax. So if you live in the UAE or Panama or one of those countries, no capital gains tax. If you live in the UK, 10% capital gains tax. In US, 20% capital gains tax. So it depends on where you are living. But if you're in the UAE, for example, no capital gains tax because the UAE does not raise capital gains tax. If you live in Mauritius, they don't have capital gains tax. So it depends on the country you reside in. But very important is that to make sure you don't double tax, because now remember, the tax treaty with America gives America the right to tax you first. And SARS then says, we're not going to give credit for the Americans because the source is a South African asset. And we have the first right to tax. Then you have this fight between the two tax authorities. So that's very, very interesting, is that I've now had 2 or 3 cases, specifically Australia and America, where they say, sorry, go and sort out your refund with SARS. We're not going to give you credit because the treaty says you are resident in our country, you have a permanent residency or green card, and we have the first right to tax you. So you get your credit in South Africa. So I haven't seen that from the UK yet because they have the remittance. So it's a bit of a conundrum there, whether you do remittance or not remitting. But US and Australia, very aggressive. They want the tax first.
Just on that question, though, or my understanding and feedback, even if I'm living here or anyone's living here, but you have a South African share portfolio, surely you would pay capital gains tax in South Africa when you sell. Okay.
No, if you tax non-resident, they can't tax you. If you tax non-resident, whether you're South African ID or an American or German, South Africa can only tax you on your immovable property in South Africa. So that's the beauty of tax immigration, is that exempts yourself from your capital gains tax. And that's why SARS is so aggressive about the cryptocurrency, saying it's not capital gains tax, it's income, because then they have the right to tax. But on capital gains tax, they have no right. It's a unilateral exemption. The 8th schedule says South Africa can only tax non-residents on immovable property in South Africa.
Okay,
so then you don't even need a treaty. Yeah, you don't even need to be in a treaty country. You can be in any country and you exempt.
Okay, but then also just a good reason why you should backdate it, because then any gains, you're getting that 20% gains without paying any tax on it. So it just makes sense. And even the further back you can go, the better for some people who might not have even had that share portfolio, 4 years ago.
Well, also interesting is that I on Sunday had a consultation. UAE, we work on a Sunday for the people not from the UAE, so I was working on Sunday. And why we tax immigrate or backdating is tax immigration. He bought Tesla shares. So if we now tax immigrating with that Tesla shares, huge tax.
Oh, jeepers.
We rather go back to the VDP in 2016 before we bought these Tesla shares.
Okay, good to know. All right, let me run through these quickly. Someone says they've done the TCS of good standing, shows green and okay. What is a 3-year bank statement? So it's not 3-year bank statements we're talking about. It is 3 years of assets and assets and liability, a balance sheet. Yeah.
So just to give a practical example, what you do is you take your retirement annuity or the portfolio, what do you financial planners call it? The portfolio summary.
Yeah.
That's the one part. Then you take your IT3, the tax certificate of your interest earned. On there is a balance of your bank account. And then you're 80% done. Then you only need to add the value of South African immovable property, your title deed property. And then quite interesting on those, SARS are asking for the market value and the cost price, because that's where I'm saying they're putting that little data in their database so that one day when you sell that, they can collect the capital gains tax. But on all the other stuff, they only ask market value, and that portfolio summary that the insurance people give you, it's quite good.
Good.
Then just something for, I don't know if you know how to overcome that. Someone came to me on last week, Wednesday. They went on this There's a web page in South Africa where you can log in and you get all your life insurance and things listed for you.
Yeah.
But the problem is they need a South African cell phone number to verify you. And I said, well, that's unfortunately, as far as I know, those web pages won't take a foreign telephone number because it only has the 10 numbers. So the minute you go over 10 numbers, they can't do that. So for those people living outside South Africa, no longer have a South African mobile, get yourself a financial planner. I know financial planners are now going fee-based, but again, that fee you pay is the best insurance policy you can get.
Yeah, so look, I know from a planner's perspective in South Africa, most of the advisors use Astute, which then syncs to all the insurance providers as well as the investment providers, so Coronation, Allen Gray, all of the other guys. And there's a fee that they pay to request those updates. So I'm sure you can just contact with one of them and they would charge you.
But the one, if we can call our names, the one that people want to do, which is free, is Verify. And Verify won't work without a South African cell phone number.
Okay, and can you use a family member or friend's number, or does it have to be your number?
I can't remember what he said, what was the reason, but there were some problems with it because he tried that. And I think it was probably, if I remember correctly, it was someone who already did it, and that number was now linked to another ID number. They do some security checks, because otherwise I can start getting information on my ex-wife by just getting her ID number and my cell phone number,
Yeah, that could be a bit offside.
Yeah.
So I just want to see how many questions there are.
The Astute one is the best. SARS totally accepts that. You just attach it, use the figures from there, no problem.
Awesome. So look, there's a couple more. Just how do I get the entry-exit report? So that you can Google and find, or you can access.
Just a quick answer is the easiest one is the ICA app if you're in UAE. Or if you go to the airport I don't know exactly at Abu Dhabi airport, but at the Dubai airport, you go to the top floor on the right-hand side where the Emirates counter desk is. You go past that and there's a EMR desk there, and you go to the EMR desk and they'll help you.
Perfect.
141, 145 dirhams.
Perfect. When do I declare not to be a tax resident? So I know this is a client who's in the process of moving over. And what date should be used in the tax year? So you would only do that in the tax year that you move. Am I correct? So if the client is moving now, he will only be able to do that next year, July, when that tax year is open for filing.
Open, yeah. Okay, and very important, you must look at the country where you go to. For example, the UAE, you must be 183 days. In America, you must be 183 days in a 3-year cycle. In the UK, it's 183 days in the tax year. So every year, every country has a bit of a different day count. So I can't give you a blanket answer, but look at the country's tax rules. If you don't know, you type in Google OECD tax residence rule, and then the country that you want to look in. OECD has a web page for every country in the world.
Okay, awesome. So look, there are a few more questions. I think we're going to call it there, and we'll just, whatever we haven't answered, I'm going to download the meeting chat, and then I will include that in the link when I share the recording as well as the slides. So
thank you.
I'm sorry if we haven't managed to answer everything, but I don't want to run too long over. I know it's already been 20 minutes. So I do. Hugo, thank you as always for your time. It has been a very enjoyable chat for me, and I think it's been very educational for the listeners as well. So I hope that everyone has enjoyed that. And yeah, as I said, thank you very much for your time.
Thank you, Paul. And I think it's very nice to make it a chat because it's a bit more realistic. It's real problems. And thank you for everybody participating. I really appreciate the support.
You're welcome. And just to close, I know I'm going to send everything out. But if anyone is wanting to know, I'm busy flicking through all the slides here. Just if anyone wants to get hold of you, and I will send the details out, the easiest way is just to book a call using calendly.com/taxforum. And likewise, if anyone's wanting to book a call or a time with me, is just calendly.com/Paul Baker. But again, I will send that out so everyone has it and they can either book a time with you or me or both or whatever they need to do.
Thanks a million.
You're welcome. Thanks so much. And I'm going to stop recording and turn it all off. Thanks, Hugo. Have a great night.
You keep well. Greetings to everybody and thanks a million. Bye-bye.
Thank you. Bye.